Ladies and gentlemen, good morning. How's everybody doing today? Gotta say, it's a good day. It is hot as hell outside. I can't believe it. I'm actually very shocked at how hot it was. But you know what? We're inside, we're in the AC, and no, I am not obeying. I do not have the thermostat at 78 degrees. That would be crazy in a free market society where somebody's going to tell me where to set my AC. Craziness. Craziness. All right. Thank you, everybody, for being here. Got all the regulars. What's going on? Chop Shop, SmackDown, Tang, Lena. Wait, whoa. It's a Thursday, Lena. It's a Thursday, and you're off and about having fun. Shouldn't you be working today, or did AMD just go up that much? Gotta love the stock market when you can just say, you know what, I'm going to go have fun. Rusty, how are you? Man, everybody's here. Thank you so much for all the support. June, good morning. Good morning, I'm beneficial. Listen, morning is not my preferred. I'm not a good sleeper at all. So sometimes we're 1 minute late. Sometimes we're 1 minute late. It is what it is. All right. Let's get started. Read the disclaimer. I am not a financial advisor. I am not your financial advisor. Please read the disclaimer. Do your own due diligence. This is for entertainment and educational purposes only. And with that being said, pre-markets, here's what they're looking like. One more day, and then we are off for the July 4th weekend. MSTR, almost getting back to 100. Hood. Yeah, I don't know, Lena. I don't know what to tell you. I have the same problem. Robinhood is at 112. You guys are killing it. Congratulations. Oh, what was I saying yesterday? That I think that Nebius and CoreWeave were overdone to the downside. Looks like Nebius got bought up. BMNR, 1416 up a little bit. Palantir is trying to get back to 130. Micron, 1059. The Space Mob, ladies and gentlemen, 88 for ASTS and 102 for Rocket Lab. CoreWeave, 8730, trying to get back. AMD is, that's why Lena's going to have fun. AMD's back at 550. We're having fun. We're partying. I get it. I got it. SpaceX, 160. SoFi, SoFire, 1873 in the pre-market. QXO, taking a little bit of a dippy dip, 1679. Tesla, Jake Rizzo. Tesla Granny, congratulations. Tesla's at 430. Oracle, 144. Qualcomm, 183.49. Bitcoin, over 61,000. We got the Qs up just a little bit. We have Uber at 73. We got Verizon at 42. Reminds me I need to make some buys. We'll do it live. NVIDIA, 198. Not shook. Shooketh is not NVIDIA. Energy Transfer, 19. Apple, 294. We got Coca-Cola at 81. And now we get into the Lehu Zahez of the morning. Amazon, 241. Cisco, 116. Take Two, just lost 250. Next Decade, 755. Microsoft, big old Mr. Softy, 382. Zeta Global, 2075. Lena, I'm trying to use my Netflix After Dark voice. How's it going? Wendigales, 890. Salesforce, 162. Slipping. Just like DMX, slipping. CrowdStrike, I'm sorry, CoreWeave. Wait. Did CrowdStrike do a split? Was I not aware of this? Hold on a sec. Got me a little confused here. Did CrowdStrike just split? They must have. Does anybody know what the split was? Hold on. CrowdStrike split. 4-for-1. Okay, they did split 4-for-1. Oh, that should be good for the share price. I got to tell you, cheaper share price, more volume, more attainable. People, for some reason, like buying cheaper share prices. Hollis is here. ASMR content? No. My voice is starting to go. I can already feel it, so I'm going to try not to scream. My voice is already going. Ray, it is a Thursday, Ray. It is a Thursday. Is it chocolate croissants and coffee? Is it? We need to know what Michelle made for you. Google, 358, IBM, 283, Service Meow, 105. Meta, losing a little bit. We're at 606. Rubrik, 81. Reddit, 194.80. And then you got Wix at 48. It's a good morning so far. Uncle Clays, thank you so much. Really appreciate it. Alex Karp said 15 billion free cash flow in 2 years. At 45% margins, how the hell are they going to do 33 billion revenue in 2 years? Well, we modeled this out yesterday. I don't believe I still have it up. I believe I closed the sheet. This is what happens. Let me see if I was smart enough to save it. Give me 1 sec. Oh my God. I did it in Google Sheets. So, did in Google Sheets, still have it. Michelle, how are you? Michelle, were there any orders for 4th of July for anything crazy? Need to know. All right, so this is how Palantir could get there. All right. Right now, their free cash flow, 51.68% is their free cash flow margin. On a trailing 12 rate, 2.7 billion. For them to get to 15 billion at the same rate, they need to get to 29 billion revenue. 18 billion, 34 billion revenue. If they keep the same margin, we'll see what happens. Karp has so much demand, and he may be able to increase margins. So we'll see. We will see. I'm not going to say it's impossible. I'm not even going to say it's improbable, because Palantir has a way of just exceeding expectations, destroying what is conventional wisdom, and going against the grain. If anybody can do it, it's Dr. Alex Karp. If anybody can do it, it is Dr. Alex Karp, in my opinion. Was I not showing that? Jesus Christ. Was I not showing this? Okay, do it again. For them to get to 15 billion, they got to do 29 billion revenue. For them to get to 18 billion free cash flow, 34 billion. Can they do it? Yes. Is it probable? I have no clue. But I'll tell you what, if they do it, this is inexpensive. If they do it. I did not have a couple of drinks last night. My voice is going from shouting all week. I don't know how Amit keeps his voice intact. My voice is starting to go. So we're going to calm it down a little bit today. Today's going to be, today's going to be more relaxed, Steve. More relaxed, Steve. Moshe, thank you very much. What do you think about Iran RSU issuance of 9 million shares? I saw the headline. I did not read through it. My initial thought was that's a big executive bonus for the co-CEOs. We got Tesla numbers coming soon. Yes, we do. Look, I want Tesla to win. I don't want anybody to think I'm not rooting for Tesla. I'm rooting for Tesla. I am rooting for Tesla to win, waiting for the numbers to come out. We are waiting. And after the numbers come out, Hollis, I got an idea. If you could get your agents to figure out some hair gel that doesn't impact my voice, that'd be great. Even though I am using H2O water. This show is sponsored by H2O. The only thing that goes in my hair besides shampoo. H2O. All right, before we get into the regular show and everything I want to go over, it is 8:59. So we're going to hold all my thoughts until we get the Tesla numbers. We need the Tesla numbers. We need them, we need them, we need them. And if you guys are not following Cactus Jack, please go follow Cactus Jack. Cactus Jack makes it happen. Cactus Jack is incredible. Yeah, we'll go over the Iran stuff. Sure thing. Cactus Jack is a game changer. There is no question about it. And then there was the step bully. The step bully is in the house. And by the way, I went for a 1 hour and 15-minute walk yesterday, step bully. I got my steps in. Oh, God. Apple pie with vanilla ice cream, incredible. Absolutely incredible. All right, Tesla. Tesla. Where art thou? Here we go. Tesla Q2 deliveries, 480,126. They slaughtered. Oh my God. They slaughtered the estimates. Estimate 396,466. Tesla absolutely obliterated absolutely obliterated the expectations. You got to love it. Good for Elon, good for Tesla. If they did not do that, forget it. Oh my God. That's actually insane. That's actually insane. Wow. I like it. I mean, I don't know how you don't like it. Tesla just slaughtered it. We got to see what they're doing in the pre-market now. Give me a sec. All right. Good old Tesla. So, big beat. That could mean. All right. We're at 431. Let's go to the big chart. Jake Rizzo, congratulations. Elon pulled it out, but you know what? Market still likes it. This green candle's working for you. Joni, how are you? Tug of war right now between the two. Tug of war. Tug of war. In all seriousness, if Tesla wasn't so overvalued, this would be flying on that news. Tesla would be flying if they weren't so overvalued. But you know what? The news was good. Forget the red candle. This was good. Hopefully, Tesla is doing well on the energy side. There's a lot of things that Tesla does. I mean, at this point, SpaceX should just acquire Tesla. That's what should happen. They should just acquire Tesla. 429. All right, so it lost 430. Is what it is. Is what it is. Yep, Martin, I agree. I mean, if this was a smaller company, this would be flying. It's hard to get this flying off a vehicle delivery when you're a $1.5 trillion company. Unfortunately, that's the world we live in. But SpaceX is extremely interesting. It basically has an infinite TAM. And I do think they will acquire Tesla at some point. I'm not sure when, but I do believe that that will happen. Now it's really losing. 426. Oh, man. Sell the news moment, it looks like. Sell the news moment. Oh, my thoughts on CoreWeave. Well, I'm glad you asked. Glad you asked. But I got a few things I got to go over. But if you want to see, if you are interested in reading, I did put out a new article this morning about why I think that the meta news from yesterday is let me put it this way. The news from Meta yesterday, I do not believe will impact CoreWeave long term. I think this is a sell the news, buy the dip. My opinion. My opinion. So you can read my new article there on Seeking Alpha. I will break it down a little later. Before we do that, I want to watch something with you guys. Let me get the video ready. Good old Bank of America. So we saw what Bank of America said. We saw all the crazy stuff. And now we have a new analyst from Bank of America coming out and discussing that we're in a really good spot in terms of corporate earnings. I don't think that they can make up their mind, ladies and gentlemen.
The markets and more is Savita Subramanian. She is head of U.S. equity and quantitative strategy at BofA Securities. Savita, thank you.
Thank you.
What do you think? First of all, July 4th holiday.
Yes.
We're getting ready to kind of take off, get out of town.
30.
No trading tomorrow. Where do you think we stand just right now with the markets?
I think things look pretty healthy. It's hard to be bearish on America right now, given that, the economy is really running at a very healthy clip. We've got CapEx taking off. We've got these hyperscalers providing that sort of stability of CapEx spend. I think the index itself looks a little bit, fraught in terms of just supply coming online, demand maybe, kind of pausing for a moment. But I think the economy is really the bright spot. And corporate earnings are actually gangbusters this year. I mean, I think we started the year above consensus at 15%. We're now tracking something like 20% earnings growth, which is basically a multiple on the average earnings growth. So I think we're in a really good spot in terms of corporate earnings. Where I see the real benefits are in some of the more GDP sensitive companies in the S&P 500. So we've got the Fed telling us that maybe the economy isn't in terrible shape. And in fact, they might have to tighten. And by that token, that means that things are doing fine. In fact, they might be a little too hot. So I would be more bullish. And our view is go for cyclical companies that benefit from GDP growth. We're in a great nominal GDP environment. And that's the one area of the market that's still trading pretty cheap.
And that would be companies and sectors like what?
That would be industrials, energy, materials. Think about widgets. Like if you build stuff, you need the widgets to drive those things. So I think semiconductors, it makes sense that semis have done well this year. Doesn't make as much sense that they're selling off now. When you think about just machinery, engineering, construction, oil, metals, these are the areas that I think could do really well over the next, not just 12 months, but maybe the next few years.
The oil companies, the big oil companies at least, have come down just because oil prices have come down, given what's happening in the Middle East.
Geopolitical escalation and de-escalation. Yeah. So I think that what's interesting is that oil companies actually started to outperform before the war. So they're really telling us that something else is going on. They started to work maybe mid to late last year. And what I think they're telling us is we're in a power bottleneck. We don't have enough power to fire up all these new tools that we're trying to build. And by that token, if you're in a manufacturing CapEx boom, you need to move stuff around, which means you need oil, gas. And I think that's the bull case. It's not necessarily just buy oil as a hedge against geopolitical risk. It's really the idea that oil just looks like it's undervalued. These energy companies have capital discipline. They're not spending at a really rapid clip. They're more focused on cash return. And I think the cash return and dividends are really important to look at right now.
Unfortunately, a lot of people seem to don't like dividends and cash returns. Don't know why. Now, that was a much different take than what we got the other day when Bank of America warned that a three-wave shock correction was underway and the S&P could fall to 6850 and that we would get potentially 3 hikes this year. Economy's good. What I heard, moving to cyclical stocks. I do agree that, and unfortunately, here's the problem. I agree with her take on energy companies. Unfortunately, that's not the way the oil trade works. The oil trade, at least for upstream producers, is very heavily correlated to the price per barrel of oil. When oil goes up, companies like Chevron and Exxon will go up. When it goes down, it will go down. But we'll get to the job numbers in a moment. But the problem is that these companies are tied to the price. Their cash flow is incredible. Their buybacks are incredible. The dividend program is incredible. I happen to like them a lot. I would like to keep buying Chevron. Unfortunately, I think it's going to go lower with the price of oil. Now, once that happens, Once it goes lower, I would like to buy more Chevron. But Chevron's one of my favorite companies right now. It just needs to go lower. All right, so I want to get to this, and then we'll roll into some other things. So what do I think about IREN RSU issuance? Okay, so let's frame this out, and let's bring up IREN stock. Let's see what's going on, and then I will frame it out for everybody. Legends. Good old legend. IREN. All right, IREN is basically doing nothing right now. It's pretty flat. So IREN's board approved 9,099,328 RSUs to each of the co-CEOs, William Roberts and Daniel Roberts. So they issued the 8K, 18.2 million common units. Let's see where Nebius and CoreWeave are also. So Nebius 236, CoreWeave 8714. All right, so they're all green right now. So these vest in 4 equal annual installments over 4 years. Each vested tranche then carries an additional 2-year holding period. So the final shares stay locked through 2033. So that their fiscal year ends on June 30th. They are not on a calendar year. So this covers them through fiscal year 27 through fiscal year 30, and they do not fully vest until 2033. So neither co-CEO gets another equity grant package until fiscal year 2031. All the independent directors approved it unanimously, and the board says basically that the hybrid structure is the way to go. I mean, this is all a time-based award, no stock price hurdles, no revenue gates, no EBITDA targets. It's all time-based. I mean, I don't know how I feel about it. I mean, IREN's market cap, you look at it, you look at these shares, a lot of shares. So on top of that, you have the convert stack. I don't know. I don't mind a time vesting grant. I think it's a lot of shares, but you know what? If the shareholders approve it and the board approves it, I'm not a shareholder of IREN. I do think it's an aggressive amount of shares, though. I would have at least liked, I think it's more beneficial to shareholders if you do what they did with Elon. Look, you can disagree with Elon. You can disagree with his package, but at least there are targets where the shareholders benefit. If you are just giving CEOs time vested shares, I don't think that that's good. But I'm also not a shareholder of IREN, so I really can't knock it too much. I do think that performance-based are much better. You look at Nodo. Nodo did not get all 3 tranches. Nodo got only 1 tranche. He got the stock to 25 for the period of time. He did not get the stock to 35 or 45. So he didn't get those 2 tranches. Elon's package is all predicated on targets that benefit shareholders. Look, I think it's an aggressive amount of shares, and I also don't like that it's not tied to shareholders doing well. I think if you're the CEO of a public company even though your vested interest is to make sure that the stock price and the company do as well as you can, I think that a portion of your compensation should be tied to that because you're in charge. That's my feeling, period. And it got a lot better looking up in here. You got Irwin in the chat. What's going on, Irwin? Yes, it is time-based. So once again, since Irwin came late, I will just go over just the broad strokes of it. It's 9,099,328 RSUs to each CEO, 18.2 million units. It's roughly 5% of the entire share count going to two people. It vests in 4 equal annual installments over 4 years. Each vested tranche then carries an additional 2-year holding period, and the final shares stay locked until fiscal year 2033. And these are time-based. These are not performance-based. I got a problem with that. But I'm also not a shareholder. So it really doesn't matter what I think. At least that's the way that I'm reading it, that this is time-based. Not seeing anything on here that shows that it is a package where this is tied to any metrics. I'm just going through it again just to make sure I'm correct. Yeah, it's pure time-based. No stock price hurdles, no revenue gates, no EBITDA targets. You show up for 4 years and you collect the shares. I mean, that's like, I don't know. I think that Iren shareholders should have a problem with that. But what do I know? What do I know? All right. Hood, 112. BMNR, 1464. Palantir coming after you. Palantir coming after you. 129.70. Nebius, 235. Ethereum trying to get back to 1700. CoreWeave, 87.41. Rocket Lab, Space Mob, 102. QXO, 1685. SoFi, SoFire, 1875. ASTS, 87. You got Micron at 1046. You got AMD at 547. You got Oracle at 144. You got Tesla coming back a little bit, 430. Marvell, 274. SpaceX just lost 160. You got VC at 26. Uber at 73. Qualcomm, 182. You got Zeta breaking 20 again. We're trying to get back to 21. Verizon at 42. We'll see if this puppy goes lower. Realty Income just lost 62. Broadcom 370. Iren really not moving. NVIDIA 197.64. I want to see NVIDIA back at 215. I don't know if it goes up or down from here, but I do think it's going higher. Apple and Microsoft both down. Amazon down. CrowdStrike 4-for-1 split, 192. Salesforce down 163. Wendigales is down 888. Meta and Alphabet are down. ServiceNow is down just a little, but you know what's really down? Oil. I almost cursed. I'm going to try to refrain from cursing. Crude oil futures. I thought it was going to 150. I thought everybody said I was an idiot. I legitimately thought everybody said I was an idiot, that I didn't know what I was talking about, and that oil was not going to roll over. It wasn't going to trade in a band of 75 to 65. Well, you know what? It is. It's doing exactly what I said it would do. I am actually shocked it's trading this low on the band. And if this keeps going lower, we're going to see this reverberate into CPI and PPI. I am disagreeing that we're going to get rate hikes this year. I cannot wait for the next Fed meeting, and then I cannot wait to see what comes out of Jackson Hole. But this is structurally important for rate hikes and rate cuts. When oil rolls over like this, this will feed through the economy. So there's no reason to hike. None. None. All right, we got 7 minutes. We got 7 minutes until the bell. And this is holiday schedule. July 4th falls on Saturday. So the market is closed tomorrow, but I will do some type of live stream tomorrow for everybody as kind of a Temu market stream just to hang out with everyone. So Q3, we opened with a fractured tape. The S&P started the quarter at 75.08. I think we're going to get to 8,000. I really do. I think that we're going to get there. I can feel it. All right. Microsoft is committing $2.5 billion and 6,000 employees to a new AI client services subsidiary. Oh my God. All right. Listen. They did not call and consult me, okay? But what I think I said it with Chris on Monday night. I think I said on Chris with Monday night. All right. Whew. Amazon came out and they are creating a new division for their forward deployed engineers to do deployments instead of having to go to consultants. Now, and I said Monday night, don't be surprised if Microsoft does the same thing in an Alphabet, because why would you let consultants do your implementation? You do your implementation, you offer that as an added service. So look, I ran the RFPs for a fairly large company. If you have me sitting in the room and you have all the executives sitting in the room, all you have to say is, listen, in addition to our product, which you want, we also offer for an upcharge the implementation also. You don't have to go to a third party. You're going to deal directly with us. You already have me sold at that. So what did Microsoft do? 3 days after Amazon, they're committing $2.5 billion and 6,000 employees to a new AI client service subsidiary called Microsoft Frontier Company. Microsoft Frontier Company will focus on AI implementations for customers. It will embed 6,000 employees with clients. The group will include engineers, consultants, support staff, and salespeople. Rodrigo Cade Lima will be the president. And why is Microsoft doing it? Microsoft says customers are at very different stages on AI. They want to help clients choose between models and integrate AI into existing workflows. It aims to protect intellectual property and support any model in the ecosystem. Amazon had announced a $1 billion full deployed engineer initiative 3 days earlier. Anthropic and OpenAI both launched FDE groups in May. Microsoft says it has had the most success with a methodological approach to building customer intelligence platforms. I got to tell you, super bullish AI, super bullish the build out. CapEx is not stopping. Microsoft is not doing this because there's any kinks in the armor. They're not doing this. You don't do this if you're Amazon and Microsoft if you're not going to have the work ahead of you. There's just no way. This isn't slowing down. AI is real. companies are still in the infancy of adopting AI. And you know what? I'm following the money. And you know what? 2027 is going to be a really damn good year for CapEx. I can't speak on 2028 because nobody has even talked about it. But the way that everybody is talking, I think it's going to be really damn bullish also because of what we're seeing with all the chip demand. These companies on the chip side are not spending this much on CapEx for this to fall off a cliff. So we'll see what happens. We got 2 minutes until the market opens, ladies and gentlemen. 2 minutes. 2 minutes. The bell will be aggressive. Fair warning, the bell will be aggressive. All right. And before we go into the market open, the jobs report, the U.S. economy added 57,000 jobs in June, well below the revised 129,000 in May and the forecasted level of 110,000. It's the lowest job gain in 4 months, following 3 consecutive months of stronger than expected gains. However, it was roughly in line with the average monthly change over the past 12 months, which is 36,000. And in June, employment continued to trend up in professional and business services, social assistance, and healthcare. Employment in leisure and hospitality declined by 61,000, reflecting weaker than usual seasonal hiring and likely an effect of the World Cup. Employment showed little or no change over the month in the major industries, including mining, quarrying, and oil and gas extraction. So that is your print on the job report, and it's off to the races. The market is about to be open, ladies and gentlemen. It's a living beast. We're about to open. It's 9:29 and change. And Hood is ringing it in for everybody at 112.67. Get ready for the bell, the cowbell that Mega Mike got me, who tried paying for everything for me when we were in California together, and I didn't like it. We are open, ladies and gentlemen. We are open for business. We are open for business, ladies and gentlemen. Micro strategy, 98.56. It's running. It's up 5%. It's up 5%. You got Hood, 113. It is over 113, ladies and gentlemen. It is now the biggest flyer on the watch list, going back and forth with strategy, up almost 5%. Nike, Milken is getting after it. Milken is getting after it, making a big bet on Nike right before earnings. Gotta like it. Congrats, Milken. Palantir is doing the damn thing. We just got above 130. We lost it. We're getting above. We're losing it. We're getting above 130. Don't forget who may have called the bottom. Just saying. 1680 on Ethereum. Space Mob. Where are you? Space Mob, 87.93 on ASTS. And then you got SoFi, SoFire, 1890. Let's get after it. Anthony Noto, I cannot wait for Q2. Cannot wait to see what happens, because I think SoFi is in a great position, ladies and gentlemen. Netflix, Lena, they may be taking your idea from you. Netflix After Dark, it's over 75. What do you know? Apple, 298. Amazon, let's get it. I said it was bullshit that the stock price was hovering around 234. Amazon should be a $300 stock, in my opinion. This is insane. VC Properties. Where'd you go, VC? Where'd you go? I just lost you. 2650. Man, this is really moving. These stocks are runners right now. Qualcomm, where'd you go? All right, I can't do this view anymore. I got to do an alphabetical order because you know what? They're just running too much. Okay. Oil 67.75. Apple trying to get back to 300. Wow. We're going to go into the holiday weekend. I know it's only 9:32 in the morning, but you know what? We're going to go into the holiday weekend. Greeny-o, green, it feels like. AMD 531. You can't be mad at that. Amazon 243. ARM Holdings 339. ASTS 87. Broadcom losing it. We're losing it on Broadcom 367. BMNR 1473. Bitcoin, for all you crypto holders out there, is up 691. Costco 928. Salesforce was down pre-market. Now we're back up. Started from the bottom, and now they're going somewhere. I'm not going to finish the song. CrowdStrike. I think the split was a good move. Now CoreWeave's down a little bit. CoreWeave is down a little bit. Cisco 115. Energy Transfer 19. Hood is trying. It did it 117. Man, I got to tell you, I'm shocked. People are really liking the event from yesterday. And I said it, that I wasn't going to buy Hood. I did not. I'm rooting for all of you. I think that Hood is in a position where they stand to gain the most in the agentic AI. Because let's be intellectually honest, because I call balls and strikes, okay? When you hear agentic AI, okay, when you hear agentic AI, are you going to trust Fidelity with a trading bot and all that stuff? Or are you going to trust Hood? I mean, I would think that, at least for me, I can't speak for anybody else, but I would trust that Hoods is going to just be better. You know what? That's a good one. Addicted to trading. What is going on? Whoa. Pizza for breakfast? I have to know. Is it cold? I don't want to hear anything about it if it's not cold pizza. Cold pizza for breakfast is legit as hell. It is legit as hell. All right. Let's get a poll going. All right. Poll. Who would you trust to build a better agentic AI trading platform / bot? Be nice if I could spell. I forgot a T. Okay. Robinhood, Fidelity, Schwab, or what's another big one? What's another main broker? Mainstream, not Morgan Stanley or Goldman or one of them. IBKR. Let's see. Please answer. Yeah, I threw an EBK. Oh, E-Trade. Shit, I should put E-Trade in there. I should have put E-Trade. I'm sorry. That is what it is. IBKR is a good one. All right. Thank you, everybody, for being here this morning. I really appreciate it. If you guys are enjoying the content, please like and subscribe to the channel. It helps me out a lot. Look at this. 58% think Robinhood. I tend to agree. I would have done more, but I can't do more than 4, I don't believe. All right, I'll come back to the poll in a little bit. Iran is down. I did not like the news on the warrants, the RSUs. Meta's down, trying to hold 600. Marvell is down also. Big old Mr. Softy is up. Micron is up 20. Nibius is pretty even. Nike is up. Service now is running down a dream. The fact that Service now went to 90 last week was BS. I think everybody knows it was BS. This is a $150 stock. There's just so many things on Service now that can go right. And contractually, the downside is very mitigated. Look at that. NVIDIA not shook. And we're going to get into, did Trump, I mean, listen, the only reason Trump's tweeting about Micron is because they donated $250 million to the Trump accounts, which, look, I don't have a problem with it. I love the fact that we're starting kids out investing in America. I do have a problem with the fact that Micron's doing it for a very specific reason. I mean, it's very clear why they're doing it. Oh, they just so happen to donate $250 million as Apple is talking to Chinese companies about memory. They couldn't have done this donation 3 months ago, or when Brad Gerstner was everywhere talking about this. Get out of here. Get the F out of here. I'm sorry, but BS. And look, I'm all for companies investing in the Trump accounts. I actually wish they were not called Trump accounts because I think it takes away from it. And I'm going to shut up and I'm going to say, we got two people in the chat, Tanner and Chris. I'm going to send them both. You know, Tanner wants to talk a little bit. He's going head to head for first place. I'm going to send both of them an invite. They're both more than welcome to come on. And we can talk about the draft. We can talk about tech. We can talk about anything they want. Captain Sleepy Time and Chris Patel. More than welcome to join. But I think that the Trump account should be called something else. I don't like the name of it. His name is too polarizing. Whether you like him or not, his name's too polarizing. They should have never been called that. And I just think Micron had all the time in the world to, Tanner, you can call in. You don't have to be on video. You can call in and enjoy a coffee. I'm enjoying a coffee too. Difference is mine's from Starbucks, yours is from McDonald's. I also think that, you know what? Micron should have done this months ago, not now. It looks bad. It looks bad. I agree. Excuses. NVIDIA 197.85. Realty income 62.49. Oracle catching just a small bid here. Palantir running down a dream. Let's get after it. 132. The deal with NVIDIA is going to be big for them. I actually think the deal with Zeta is going to be beneficial to them also. Palantir doing it. Qualcomm 181. Rubrik 83. Reddit 196. I got to figure out what I'm doing. SoFi 19. We did it. Let's go. Well, I've been very clear about this. I'm an independent. I call balls and strikes. I may lean one way more than the other on some things, but you know what? I call balls and strikes, and I don't just vote party lines. And I'm willing to back good ideas because I think good ideas in the end should win. And the Trump accounts were a great idea, not a good idea. I just don't like the fact that they're called Trump accounts because it's too polarizing. Okay? That's not turning into one side or not. That's stating an opinion. Tanner and Tim Hortons behind 50 people. I've never had Tim Hortons. I need to try it. And I've never actually had Mick Cafe either. Never had Mick Cafe either. Should probably have that also. All right, Tesla fallen. Look, if they were a cheaper company, this news would be freaking amazing. But you know what? The stock is still overvalued. Okay. The stock is overvalued, in my opinion. Yeah, this is thank you, Charles. This is a great point. And this is why I don't like it being called Trump accounts, because there's legitimately going to be people who are not going to open these accounts for their children, all because it says Trump, or because he was a part of it. I don't like that. I want everybody to be invested in America, and I hate the fact that his name is on it. I hate the fact that his name is on it. I really do. It pisses me the hell off. Mr. Chris, how are you?
Good, man. Let me just make sure I have the right mic.
You sound great.
Okay, let me just double check. Okay, great.
Oh, we're running. So Zeta's 2111. Now that Chris is here, we're going to go look at the draft real quick, and then we'll get into some other things. And, Tanner's talking a little smack right now. Tanner's talking a little smack that, I may be in first place. I may get to first place. I may take out Maddie. Let's see. Is he?
He's in first place right now.
Oh, he's in first place. Look at this guy. The 5 seed is in first place. He overtook Maddie. Look at that.
Every dog has his day, man.
Look at that.
We'll see at the end of the year. You know what? I'll be honest. I do think that he is going to do well. I think he's got a much more diversified portfolio, and I do think that there's some rotation into software that I was hoping, I thought originally before we did the draft, I was going to be a lot more heavier into software, but I figured we had at least another 6 months of the AI hardware part running. And I just think that we had just bad timing. A lot of us picked a lot of the AI data center build out plays right before that weekend where a lot of this news came out. So that's just how the market is sometimes. Who would have guessed that CoreWeave would be down 27%?
No, not me.
It's
so obviously not me.
Yeah, and the good thing is that it should recover. A lot of these companies are not like dying for business; they're all profitable. I think CoreWeave does have a lot of debt on the balance sheet, but there's no shortage of demand. So, like I said, this is just sometimes like the exact timing can be a little bit weird, and where you end up at the end of the year is going to be the real benchmark, I suppose. Because we had it fluctuate back and forth last year too with the same draft. So early winners don't necessarily mean last. The end result is going to pan out. So
I was in last for more than half the year.
Yeah. That Micron position was
killed it.
By the way, I'm inclined to agree with you on the whole Trump accounts thing, because the thing is, like, when you put your name behind it, while it is nice, like, oh yeah, this person, you want to kind of get your policy across. I agree with the policy, but naming it only makes the other side politically, and that's the kind of the world that we live in right now. It's like Obamacare fundamentally I thought was a good idea, but because people called it Obamacare, there's like a whole set of people that hated President Obama that are automatically like, we need to get rid of this thing because, and half the reason it's not even because they even understand it. It's just because who it's labeled after. Had they just called it the Affordable Care Act and just left it at ACA, things would have been a lot more tenable for most people. Yeah,
the problem is, and like you just said, you can have a very good idea, but unfortunately, politics has become so polarizing these days that the other side wants nothing to do with an idea, even if it's good. And look, everything's got its flaws. There's no single policy that's perfect. But affordable, who doesn't want healthcare to be attainable by the masses? I think everybody can agree that they want everybody to have access to healthcare.
Yeah, I think the challenge is when people look at things like health, like I'm not going to go too far into it, but a lot of the people in the chat, they're just saying like, oh, it's like Obamacare made healthcare more expensive. Here's the thing. Healthcare is expensive And as we get older, Americans generally have gotten more unhealthier over time, right? And so we right now have a collective responsibility to take care of society. Now, do I think that a whole bunch of people dying on the streets is a good idea, and that's how we're going to save our money, where it's like the poor should go on the street and die, everyone else can get lower health insurance? Because I mean, we could do that. We literally, if like, let's say we didn't have Obamacare, we didn't have a lot more coverage for people, we could just say, oh, you got old, go die in the corner. Oh, you got sick, go figure that out. Right? Obamacare gave a lot of people opportunities to actually get healthcare for the first time. Does that mean that collectively all of us are paying? Yeah. Could some of the reforms in Obamacare actually help to meet the newer things that are happening right now in the healthcare space? Probably. But just like you said, no program is without its flaws. Every program is going to have its ups and downs. I'm of the belief that Obamacare genuinely helped a lot more people long term.
Yeah, I don't know enough about it. I just know that, nicknaming it that, obviously he didn't call it Obamacare, it was Affordable Care Act. Yeah. Nickname of it probably wasn't good. And I just think politics have gotten too polarizing. I absolutely despise that Trump's name is on this, only because I think it's going to deter people from investing in these accounts, which I think is a great idea. I think these accounts are brilliant.
Here's an example, like just because I wanted to just highlight, before Obamacare, prior existing conditions, insurance companies could bill you based on your prior existing conditions. And now, if let's say you had an unfortunate event in your life that you cannot control, you are much harder to insure. Does that mean that you should be basically stripped out of the system? Because that's what health insurance companies were doing before. Yeah. It's like, let's say you got cancer, you're more likely to get cancer again. You think other insurance companies were like, yeah, you know what? Let's give this person insurance again, knowing that they could probably cost us millions upon millions of dollars? No.
It becomes a profitability model.
Yeah. And the thing is, like, while everyone is healthy, everyone feels like they don't need health insurance or they need low cost health insurance. But when you get really, really sick, it's a major issue. And I look, if there's one thing that we all need to get used to is like, have some humanity in your soul, man. No,
I'm with you on that. So yeah. This was the next thing I wanted to go over. It feeds into everything we've been talking about. So OpenAI report. Oh, by the way, you were in the chat. What do you think about Microsoft doing the same thing as Amazon?
I mean, the thing is, when I look at this system, I think a lot of companies would have liked to do this in the past, but AI just kind of enabled it, right? Yeah. So basically, you think about the model that the Palantir adopted this model, but what they did was they hired some of the best individuals, like smartest people on the planet, to basically go into a company like, and basically act like a special forces guy and just create a whole bunch of value for customers. But that's because they were super, super special. Now people are saying, well, the FDE model works because even if someone who's theoretically like average or, a little bit above average, if we give them the right tools, they can become 10x coders. They can become superhumans, and we can actually monetize this because we can have them run on our rails eventually. So as an example, if you're a business and, you're trying to figure out a solution and Amazon says to you, like, listen, we can help you do X, Y, and Z. You take our forward deploy engineer, you take a sales rep, all that good stuff, and they create something, but everything runs on Amazon. That means that you're locking that enterprise in to the AWS ecosystem, right? And not only are you locking them into the AWS ecosystem, because they have Bedrock, you're able to basically, tailor to the needs of the customer, so that Amazon is always going to get money, even if the customer, chooses whatever model that they want. The point is, everyone right now is scrambling to make sure that they stay relevant in the world of AI. They don't want to give they don't want to cede any market share to anyone else. So I think on one side we have Jensen, who's saying we need to support these neo clouds, whether that be monetarily or guarantee some level of financing, or just, let people know that we've got their back, so that these companies can effectively compete against the hyperscalers, right? Because I think the hyperscalers also realize that if we don't try to get off of the NVIDIA tax, we're not going to make a decent profit margin. So what are we going to do? We're going to design our custom ASICs. We're going to design a lot of our stuff. We're going to try to keep as much margin in-house as possible. And, it's like it's like a land grab right now. Everyone is trying to grab as much land as they can.
So we got two big things. First, Anthropic is now in talks with Samsung to manufacture their custom AI chip. Samsung of all places. I'm a little shocked at that, but you know what? Okay. OpenAI, did you see the news that they broke last night?
About what?
They are reportedly cutting inference costs by more than half. So I don't know how credible the information is, but
it's probably credible, because they're probably seeing an exodus of customers getting off. Like, I mean, all the data that I've been looking at says that every company right now went from token maxing and getting these crazy bills to now waking up and saying, holy shit, we need to cost rationalize as much as possible. And the thing is, a lot of companies are choosing the open source models that are out there. If your bill is like hundreds of millions of dollars because you're running all of this workflow, and you're paying Anthropic and OpenAI so much, and especially OpenAI, you kind of want to look for alternatives. So, and I'm not even talking about like some BS small time companies. You're talking about the biggest companies in the market switching to Chinese models. And their main reason, their driver is, it's very simple. The cost is like 15 times lower, and the performance is only like 1 or 2 percentage points lower. So it's kind of like, for a little bit less in performance, I'm getting like 15 times a cheaper model. And it's not like they're not using, by the way, the what is it called? The closed loop models like Anthropic and OpenAI. They're just basically tailoring it to the actual need, right? So if they're doing like simple tasks, you don't need like Opus 4.8 and Fable 5 running those. Like, you can get away with using a cheaper Chinese model, and then just having the more advanced logical reasoning model that's, high level, do a lot of the orchestration stuff. And, people are finding value with that.
So what was reported is that OpenAI engineers told colleagues they found optimizations that would have the cost of inference.
Yeah, whatever. That's bullshit. Whatever they want to say. They're going to say whatever they want to say to justify it, so that that doesn't weaken their position. I'm sure that they probably found some, cost savings, but that's all PR. That's all PR. Think of it this way. If they had no issues with token demand, but if they could lower their own pricing, they wouldn't say anything to clients. They would just say, fuck it, our margins just went up. Good for us. Like, do you know any business that's like, yeah, you know what? Let me pass on cost savings to my customer while I'm losing money.
Well, there is a both side to this. So this set basically stacks on the hardware path, and the bull case, when I think about this, is cheaper inference basically is going to mean more usage, more agents, more tokens, and demand that expands throughout the entire stack. And look, the new Rubin system already is 10x lower token cost. I mean, NVIDIA is already building chips to lower the token cost, because their belief is as tokens become become cheaper, the usage will expand, and you will have companies and people using more of everything. If you can only use X amount in a month, you're going to limit what you can use and save it for only the really hard tasks. But if tokens become cheaper, where you can legitimately use it for everything, why wouldn't you spin up agents? Why wouldn't you create workflows and stacks to automate as much as you can? This actually may be super bullish for a lot of companies, if this is true with OpenAI, and they can help bring down the cost of tokens.
Yeah. No, I mean, I'm of the belief right now that the key here is you've got two expenses, right? You've got the model expense that basically every business is going to pay, and from that token. So let's say you have one token. There's two parts to that billing. There's one, the cost that or the profit that goes to the model provider, and then there's another part that goes to the actual place where this thing is hosted, right? So like AWS and GCP and Azure and all that good stuff. So the thing is, a lot of these like let's say Google, Amazon, Microsoft, they're saying, why should I even pay OpenAI? Why should I pay Anthropic? Like, if I can develop a model that's cheaper, right, and I get people using that, now I can retain both of those profit centers. I don't have to share any money to OpenAI. I don't have to share money to Anthropic. Now NVIDIA is saying, well, we'll just open source some of this stuff because we want everything to run on as much NVIDIA hardware as possible, right? I mean, think of it this way: if you can have Nemotron, which is like open source, running on NVIDIA and it's optimized for NVIDIA hardware, that means that you're basically becoming entrenched into the AI, future. So I just think right now we're at a point right now where the model layer is probably not where you want to be. Like, the models are getting commoditized, and they're getting commoditized rapidly.
Oh, I got beef with Anthropic. I got a lot of beef with Anthropic right now. So they're giving everybody Fable 5 back until July 7th, and then they're taking it off the platform. And the only way you can use it is to pay per token. It's no longer going to be part of the monthly plan. Like, what are they doing? All they're going to do is make me go from
an arm and a leg.
So I'm going to go from the $200 plan to the $100 plan for the regular thing, and then I'm just going to throw the rest of the money at Fable so I can keep using it. Like, I'm going to spend the same amount of money. Like, what are they thinking?
I mean, to be honest, man, I look at the incremental improvements that are coming from a lot of the models, and I'm seeing less and less value depending on the next generation that's coming. But I don't know, I don't see much of a difference between Fable and Mythos 4.8 right now. And they actually did a whole bunch of tests. I was actually watching this on Twitter, and they were actually posting about how people would ask a question to Fable, and Fable would basically look at it and says, "Oh no, this is restricted." And what they would do is they would take that query and then reroute it back to Opus 4.8. And they would keep majority of the Fable part out. They would still bill you like you were getting billed for Fable, but they were actually underlying utilizing 4.8. It was a very interesting kind of switcheroo that was happening. Have you heard of that? Do you want me to show you what I'm talking about?
Yeah, you can show me, and then I want to play something.
Yeah, go ahead. You play your thing, and I'll show you.
So I did not get a chance to see what Liz Young said, or Liz Thomas now, about what I think is going to happen in the second half.
To our talk of the tape, how best to position if stocks, in fact, are poised to continue their winning streak. Let's welcome in our panel, Treasury Partners Richard Saperstein and SoFi's Liz Thomas. Good to have you both with us.
Thank you.
Are we going to continue this record run for stocks?
We will, and it's interesting because earnings are accelerating, yet multiples are compressing. And all I can attribute that to is the fact that the hyperscalers are now being, or have been, valued as capital intensive and asset heavy versus asset light. And I think that's a mistake, because it would be justified if these companies were not showing growing earnings, growing profits, and growing operating cash flows. But they are clearly way ahead of the game. Last quarter, 30 to 60% cloud growth, and that's going to continue, and eventually it's going to get valued by the market. So I would stick with the hyperscalers, the large cap tech, because I think the market's going to re-rate over time. You saw the Meta announcement today, and that's only going to reinforce that trend.
Do you agree?
I do agree. I think directionally in the second half, the movement is going to be higher. I do think that semiconductors continue to see volatility. I would expect a little more downside in that space just because of the big run they've had.
Okay.
But I think the Meg 7 comes back and gets back into the forefront, and the hyperscalers as well. I mean, every time in this market throughout this cycle that we've had any volatility, and I think we will have volatility into fall, investors continue to flood back into those big names. Now, in the first half, they lagged, which I think surprised most investors. But in the second half, I think they come back in.
Wow, so neither one of you are really big buyers into the idea you're going to have this big broadening move away from the hyperscalers.
I think
you don't think the juice has been squeezed, so to speak, from those names, at least in the near term, and now we need to see more of the show me on the return on all this investment that they're doing?
Okay, there's a couple of dynamics here. First of all, the broadening, sure, it can happen, but look at the PEG ratios, the price earnings ratio to the growth rates. You look at the more traditional consumer stocks, it's 5, 6, 7. If you look at large cap tech, it's 1. So you're paying 1 times for the growth rate versus, let's say, a Kimberly-Clark, a Coca-Cola, Procter & Gamble.
The current growth rate.
Correct.
But what happens if, well, we don't assume that growth rate is going to continue at this clip in perpetuity.
Well, that was reinforced today with the Meta announcement. And if you look at the growth of the operating cash flows of these companies, you take Microsoft over the last 3 years, their OCF has doubled. That's doubling to what, $200 billion a year?
Well, how come that stock has done absolutely nothing?
That's why it's probably a great value right here. But the second trend that's important is this concept that the beneficiaries of the spend have benefited more than the spenders, right? So the Ciscos, the Dells, the Aristas, the Amphanols, which we own, okay? But I think that trend will continue, yet you still want to own the large cap hyperscalers. I like that business.
Are you in the bigger broadening camp or no?
In some ways, but I wouldn't call it a broadening trade. A broadening trade that we've been talking about for most of this period is this cyclical broadening. So it's everybody wins sort of thing. I don't think that's what's going to happen. I do think the broadening out into financials, some of the healthcare names were nice confirmation of some of this, and I do think healthcare will continue to benefit.
Well, I mean, you're going down the list of a lot of areas of the market that you think are going to.
Just two.
Yeah, but
so
you think tech's going to do well, also, don't you? The mega caps, at least, maybe not the chips, but.
So let me be specific. So as money rotates out of the chips, I think healthcare continues to be a beneficiary of that. Not because it's a different choice that is a substitute, but because investors are looking for growth opportunity and they're finding it in pharma and biotech. So I think that still happens. But I do think Meg 7, to Rich's point, I do think Meg 7 comes back in. You do stick with those. Also, healthcare is one of the sectors that tends to perform the best in a midterm election year. And some of the volatility that we're likely to see in fall is going to be about midterm elections. So I think healthcare is a place where it may look like there's a broadening trade, but it's not this wholesale cyclical, everybody wins sort of broadening trade.
I kind of agree. It's what I've been saying. I think the hyperscalers are going to lead it in the second half. I really do.
Yeah, I'm probably in the same camp. I think the amount of money that these guys are able to generate is going to be pretty substantial. And then on top of it, I do think that at some point they are going to cost rationalize, right? Where people are just going to, it's not to say that they're going to stop spending money on AI CapEx, but what they're essentially going to do is say, okay, how much do we actually need? And let's build out for the actual demand picture and not just build and hope that, like that Kevin, the movie, was it If You Build It, They Will Come?
If you build it, they will come. All right, the markets are ripping. The NASDAQ is up 197. The S&P is up 51. The Dow is up 336. We have Apple at 302. It broke out over 3. We got AMD 542. We got Amazon trying to get to 245. Maybe it will, maybe it won't. We got ARM Holdings over 350. Broadcom is in the green, 371. Costco 928. CoreWeave coming from the bottom, back over 87. Energy Transfer 19. Ethereum just cracked 17. Bitcoin, almost 62,000. Alphabet now in the green, 363. Hood trying to get to 120. It's a 118 and change. IREN is down. Coca-Cola, almost 82. Meta fell to under 600. Marvell, 271. Microsoft, 386. Telling you, don't be surprised if Microsoft gets back to 480 to 500 by the end of the summer. Do not be surprised. And there you have it. MicroStrategy. Maddie was saying that this could be a generational opportunity. MicroStrategy is running off the bottom. If Bitcoin keeps running, Sailor's going to be laughing to the bank. Micron just turning green. Nebius turning green, 235. Netflix wants 76. It just got 76. Nike's over 44. ServiceNow, 106. NVIDIA trying to get back to 200. We're 199.57. Palantir is 132. Oracle is now green, 145.76. Qualcomm, 182. Rubrik, 83.74. We got Reddit down a little bit, 194. SoFi, 1862. It lost 19. TKO Group back down to 196. It's now getting interesting again for me.
Can I make a suggestion?
Yeah.
As much as it's interesting to just read the tickers, can you share this screen real quick and just see what's actually running? Huh? Yeah, in terms of like which themes are actually running. I wish I could blow this up more. Oh, there we go. So here we go. Like you can actually look at different sectors that are actually doing well. Like right now, lithography is down. So like the suppliers for AI, like AI hardware suppliers are down. But what's really running right now is crypto and payments. So you can see here like which ones, like platform-wise, Coin, Hood, PayPal. So you can see that money is starting to rotate into some of these other themes right now. You know, and then like I said, from there you could probably read the actual like what is it called? The company names. You see, like for launch for space tech, like Rocket Lab is up 6, Viasat, satellites, you've got ASTS running 4%, you know. Medicine's catching a bid because of a couple of names on there. Moderna. Who would have guessed Moderna, which was the Tanner, what is it called? The joke, you know, the not the joke, what is it called? The placeholder is actually killing it right now.
Killing it. Killing it.
Yeah.
Absolutely killing it. The market is absolutely green. Uber, I mean, this is, and Zeta over 21. For some reason, nobody wants to believe in this company. Nobody. I strongly believe Zeta is going to have the most firepower in my portfolio in the stock draft.
Firmly. What is that? Ad tech?
Yes.
That would be, where is it? Where would that be? Design, enterprise. Is it just them or is it telecom? I don't see ad tech anywhere.
Whatever trade desk is in on
here
that,
it is.
Will be there.
Here, ads. It's not included here. Maybe it's because it's too small.
Maybe it's only a $5 billion company.
Marketplaces. Yeah, it's not on here. Sorry, go ahead.
I do believe Zeta has the most firepower in my portfolio. It's going to run, in my opinion. I cannot wait for Q2 earnings. So themes for second half of the year. We are in second half of the year right now. We know what worked in the first half, what didn't work. Chris, do you think that we get rate hikes or rate cuts or just toe the line?
I think as long as oil stays down, the market could bake in some flatness in terms of cuts, because the challenge is, okay, let's do year to date. Yeah. The challenge is you need to have that data catch up with what we're actually seeing on the ground. So the Fed can actually make a decision based on real data, and they're not just, you know, shooting blindly. And I think it gives a lot of Fed cover to actually have the data come out and say like, look, inflation is actually going down. That's why we're cutting. So, like once the data actually becomes crystallized, I think that could help the market, especially companies that are on the, what is it called, on the receiving end of rate cuts being a net positive for their business. So if you're a company that's like capital intensive and you have a lot of debt on the balance sheet and a lot of that debt is coming due in the next few years, right now the market is saying if you don't get cuts, that means that it's going to impact your earnings. But if we do get, let's say, 4 or 5 rate cuts and that gets baked into the equation, now all of a sudden the multiples on that business are going to go much higher, and you'll actually see a rapid rise in that business. So this is the year to date, by the way, and like which sectors, which themes are getting hit and which ones are actually like not doing so good. So like semiconductors, like foundries are up almost 160%. Design tools are up 78. Lithography is up 113. Packaging is up 132%. Wireless is up almost 50%. And then you look at like SaaS, like horizontal SaaS is down 30, vertical SaaS is down 30. So I think what we could see is a rally in SaaS. Like that's where I'd probably focus on looking. And even though theoretically SaaS is not necessarily played out very well, there is one theme within SaaS I do think is going to be a really big positive. And I was speaking to what's his name, Sam, about this, and that was cybersecurity. Cybersecurity with Mythos is going to be super, super important.
Oh,
because everyone is saying this new model can crack like the most advanced things. So every business right now, and you worked in insurance, so you know exactly what I'm talking about. The amount of money that you have to basically shell out for insurance heavily depends on the cybersecurity readiness that you have.
Yeah, it's not just the cost of cyber insurance. What's very important is during the renewal, or if you're going for new cyber insurance, I have never seen a questionnaire as complicated as the cyber insurance applications. They are so robust. Every last question about your network is on there. And if you do not have very specific things, they will not write your policy, and they will say that we are leaving the RFP or we're not going to issue you insurance. Like, you have to have so many security aspects from your hardware to your security stack. It's absolutely crazy. So yes, I agree with you. Cybersecurity companies, CrowdStrike, SentinelOne, Fortinet, Cisco, Palo Alto, they're all going to do good. I don't even think their valuation matters at this point.
There is one sector that I have personal experience in a little bit, and this is just me hypothesizing this. In healthcare, I would take a look at healthcare hardware. So like companies like GE Healthcare, right? Like GE Healthcare makes CT machines, MRI machines. Siemens does that. Philips does that. And the reason why I would be very bullish on a lot of those hardware names for 2 reasons. One, there's a lot of legacy hardware that's sitting around in hospitals all around the country. If Mythos is what it is, all of these hardware platforms need to be upgraded. And the thing is, the existing software that's on those things cannot be upgraded. Like it's end of life at this point. So that might actually force, like AI might actually force a lot of hospital systems and healthcare companies to actually engage in increasing their readiness by replacing those machines. I know that sounds like far-fetched, but there was this giant upgrade cycle that came during COVID because the government was just giving money. Like everyone was like, all these hospitals, they were getting a lot of money from the government. And at the time, people looked at that, but there's still a lot of hardware out right now that does not meet security guidelines. Like as an example, like we're going through this exercise at my hospital right now where every piece of equipment that's out there has to be basically cataloged, and all the software has to go through our security team to ensure that it's able to be integrated into our hospital network without posing a risk to the hospital itself. Because a lot of these older machines, literally, they would just take an older machine, they would put like Wi-Fi, it would be connected to your Active Directory, it would be connected to all your systems. You would have a firewall, of course, but the firewall was very weak. It didn't have the encryption, so a lot of the data that was sent, it was not encrypted, and basically, it had a bunch of USB ports that people could just get in, and now all of a sudden you have access to our network, and that's a big no-no for everyone. So
Okay, second half of the year, do you think we cross over 8,000, or do you think it's sideways, or do you think we fall? Where do you think end of the year we look at?
barring any black swan events like Iran and that whole situation going sour, I think there could be a strong case for a resurgent economy and basically us doing well. The only thing I'd say is probably more likely to see some rotation than just pure. Like, I think this is going to be the what is it called? Like, just a straight upward move and everyone rally. So I'm actually agreeing with what's her name from SoFi? What's her name?
Liz Thomas. Yeah.
Yeah, Liz Thomas. There's Liz Thomas, Liz Ann Saunders, and then there's like, man, everyone. I feel like every female in finance just has Liz behind it, or Elizabeth this, Elizabeth that. So, yeah.
Okay. 8K, how about 10K? Let's not get ahead of ourselves. I don't think we're going to 10K this year, but I do think 8K is definitely feasible. And then I guess if we had to look at where we go in AI, I still think we have a broader market rally still with, I think that more money will come in and these companies are going to get more profitable. And I still think finance I cannot wait for Q2 to start, because I still believe these finance companies, these conglomerates, JP Morgan, Bank of America, Citi, Wells, I think that they have so much margin that they can tap into by automating a lot of processes. And then companies like J&J, old school companies that you wouldn't think of, I think are going to be key beneficiaries of the AI revolution. And I think that their earnings will expand quicker than people think over the next 5 years. And that will keep driving the market higher, bar a black swan event that I can't foresee. I actually like a lot of industries outside of tech right now. And I think this becomes an everything rally. I really do, especially in an environment where rates are going to fall. I don't see how rates don't fall next year. And I may be a little wrong on this year. Maybe we get one, maybe we don't. But I think next year they have to come down. CME Group already revised down for September by about 11%.
Yeah, I think we're likely to see. I mean, look, to be honest, if you want the easy money is Mag 7 and chill. Like, there's no, like, I find it's too simplistic not to bet on companies like Microsoft, which are down this year by 20%, while everything is pointing towards like more operating income, better cash, more and more cash flow. Yes. Are they getting a little bit punished right now for spending money on this AI data center build out? Yeah, probably. But at the same time, people are kind of like looking at the expense side of the balance sheet without looking at the cash flow, without looking at the other side, which is that operating income growing at the fastest pace in God knows how long. So I would say ultimately, if you want the easy bet is the Mag 7. And among the Mag 7, I'd say Microsoft, Meta, and Amazon are probably the easiest one. Google may be a little bit, not to say that Google won't do well. It's just Google has run a good bit. And so it would take a lot for Google to do extremely well. Like, I just feel like Meta and Microsoft are so oversold right now that they're actually the opportunities that you want to look at for the rest of this year and possibly the first half of like next year.
How do you feel about some of these ancillary trades? So you've actually gone down the rabbit hole. I haven't as much, but I'm kind of warming up to the idea. A lot of people have been asking me to start looking at photonics and some of these other things. Maybe they have to catch a bid. I mean, I'm very ingrained in the learning about the mineral aspect because I think minerals are going to be the next hot area. I know that this is not a new theme. I know a lot of people have been saying minerals for a while. They haven't really taken off, but I do think that there are some plays over the next 5 years for sectors that could be good. Are you interested all in photonics or anything like that?
Look, I learned a while ago the best thing I can do for myself and for my own portfolio is stop trying to pick the next big thing because I'm not good at it. Like I'm good at figuring out mean reversion, right? So I'm starting to implement that more in my investing style where I look at a sector that's oversold and I look at the potential for a nice mean reversion. Like as an investor, I think that's where my core strength is. So the idea that I have the ability to pick the next generation of winner that could be a 5xer probably is not something that I'm good at. And I've tried to be that guy, but I'm not. And I just, I have to admit it. So I'm going to say I'm more of a mean reversion guy. So you're asking the wrong person, basically. I think everyone's investing style is different. So I'm not that guy.
Yeah, I'm kind of in the same boat. I mean, I know what my strengths are. My strengths are value. My strengths are macro and economics, not necessarily picking next themes or whatnot. I do want to watch this with you. This is from a few minutes ago. Mm-hmm. So I have no idea. I just saw it out of the corner of my eye. I have no idea what they're going to say. And we need to react to this.
Stocks in the SMH on pace for their third positive week and 4. Of course, overnight, names like Samsung and SK Hynix were dragged lower. Kospi had its worst day in a month after some big drawdowns. Still the best performing index of the year. Names like Micron and SanDisk are down sharply on the week.
Meantime, OpenAI is reportedly in early stage talks with the Trump administration about taking a 5% stake in the company ahead of a potential IPO. Our next guest argues that the financial pictures of both OpenAI and Anthropic are so dire that they should not even be allowed to IPO. Joining us now is Easy Primary Research CEO Ed Zitron. Ed, thanks for joining us here. So, we don't really know at this point in time, right, what the actual financial picture of these companies look like. Well, they wouldn't be the first with bad financial profiles to go public.
Well, they'd be the first to be this bad, other than WeWork, and even then, this is so much worse than that.
Zitron, this guy.
2025,
bro. Can we stop? Can we stop? Look, I tried listening to him, and I fundamentally think he is probably on the right. Just stop listening to this guy. Let's just. I
don't even know who this is. I've never heard of him.
This guy has been going on every single podcast, every single appearance, everywhere. Like I'm talking about, this guy is if AI had like a final boss, this guy is the AI. Like if people think I'm like a bear on AI because I'm trying to rationalize things, this guy is just saying all of AI is a fraud, basically. Like,
I can't wait to hear this.
His logic, I mean, some of it is sound. I'm not gonna deny him. But his logic is OpenAI and Anthropic are running the largest pyramid scheme on the planet. And basically they're overstating earnings by like doing like weird things accounting wise. And long term, he thinks that, and I'm inclined to agree that I think, OpenAI does do a little does do some funny business. Anthropic probably does some funny business in like how they report things, but it's not necessarily like to the level where this guy thinks like the entire AI like thing is just going to basically blow up. I mean, we can listen to him, but I'm telling you, he's very similar to Jim Chanos in that he looks at today and then like crafts a thesis without ever really looking at the possibility of tomorrow and all the things that could happen, right? So if you look at Chanos, right? Chanos for the longest time said Amazon was unprofitable. They're not worth it because Amazon is unprofitable. Well, clearly everyone kind of proved out that yes, in the early stages, Amazon was unprofitable, but eventually they built it out. If you looked at Amazon on an operating cash flow basis, it all kind of made sense, right? Same thing with Chanos. Chanos also was down on Tesla, and Tesla kind of proved him wrong. He said Tesla would never make money. They're basically going out of business, blah, blah, blah. But he was proven wrong, right? Like economies of scale ended up working out. So this guy's logic is AI is not demonstrably profitable for the AI labs. And if the AI labs don't make money, that means that all the RPO that they have with everyone else, like CoreWeave, Nebius, Google, Amazon, is not actually going to be delivered. And if it's not delivered, then Amazon, Microsoft, and Google are basically, and NVIDIA are screwed. Like, just listen to them. Screw it. Like, go ahead. Let's take a look at it together.
Financials that the FT&I reported. And the problem with these companies is their margins are getting worse, and their costs increase linearly with their revenues. There is no proof that they can improve their margins. No amount of specialist silicon or supposed Vera Rubins will bring these costs down. And we're at a point now where OpenAI is now potentially pushing their IPO to 2027 because they couldn't get $1 trillion valuation. It's clear that people are wising up to the problem of generative AI, which is there's not really a business there.
So that was something that was discussed yesterday on Squawk Box. The comments from Alex Karp, the Palantir CEO, making their rounds. I think we have a clip teed up. Take a listen.
The general way these things were sold, and again, these people are, Sam and Dario, there's nothing more fun than debating Dario in private. So I'm not throwing shade at them, but something has gone completely wrong. And the basic view among enterprises in this country is I'm going to chillax and waste my time with tokens. I'm going to get no value, and they're going to get my IP.
Yeah, so he was being sarcastic there. This idea that enterprises are balking at this idea that they're going to be paying all this for tokens. They're not going to be able to control the data usage and how the data is used, and they're not able to really measure ROI. What do you make of those comments?
I mean, I hate to agree with him, but he's right. These companies, Anthropic and OpenAI, they encourage waste. He actually said that these companies don't charge on outcomes, they don't charge on success, because you can't with large language models. They're inherently hallucination prone, as proven by OpenAI themselves. And so they encourage waste. They want you to spend a lot of money, and then they try and pilfer your ideas. Anthropic already tried it with Claude Design with Figma, and I believe they have a relationship with the company, and Dylan Field even said he was shocked by it. And what's crazy is, as well, is their copies of these companies not particularly good. They don't make great software. You'll notice that both Anthropic CEO Dario Amodei and Sam Altman have both said, we can't wait to see what you build with this. Well, that's because they don't know what you can build with this. They want everyone else to do their innovation for them, spend as much as they can on tokens, and then take whatever's left, except they lose too much money for that strategy to actually work.
So then what do you think should happen? Do you believe that these are companies that should be nationalized? As we read in the intro, there's discussions reportedly that the administration and potentially some sort of sovereign wealth fund would take a 5% stake in OpenAI. I mean, is that a situation that you would like to see happen, or do you think that's more disruptive?
No, I don't think there's any need to. They talk about, I think Sam Altman said, well, we can share the benefits of AI and the profits of AI. What profits? What returns? That 5% will have to get congressional approval. The sovereign wealth fund is still an idea at this point. But fundamentally, large language models are not the future. The only reason big tech is investing in this is that they've run out of hypergrowth ideas. They don't have a next iPhone. They don't have a new Google search. So they've put over $1 trillion, with trillions more to come, into a kind of a dead-end industry, because when that ends, they'll have to admit that they don't have anything else.
So you think AI, LLMs overall, is a dead end? You see no business model here. You see no utility from AI whatsoever.
I see this as, in the future, as a boring hardware-based business, the kind of the Oracle licensing hardware model. I think this is a $10 to $30 billion TAM industry, pretending to be a $1 trillion one. And because everyone's propping it up, because they have no hypergrowth ideas, everyone's just kind of pretending it's the kayfabe of the tech industry that really has run out of ideas.
It's funny you mentioned Oracle, because people were quoting the annual yesterday, quote, some some of our customers, OpenAI, may be highly leveraged. We may experience risks of non-payment in our dealings with such parties. Are we going to see this from a market standpoint first in shares of hyperscalers?
I think we might, but Oracle is a particularly scary one because they are building 7.1 gigawatts of capacity just for one customer. And they even said in their annual report that the risk was they might not get paid. OpenAI only loses money. And I think I estimate it's like $75 billion of revenue annually that they will have to pay for the full Stargate data center project in annual compute revenue. OpenAI can't afford that. And if they can't, Larry Ellison can't afford to pay back those bills, and Oracle stock will be in jeopardy along with the margin loans that Mr. Ellison holds. It's genuinely dangerous, and it's dangerous across the board for neoclouds, for hyperscalers, for every associated party of the LLM industry.
Is Oracle the tip of the spear on that, or is it something else?
I think it could be the neoclouds, because with this rumor of Meta selling their AI capacity, I think companies like CoreWeave, and especially Nebius and Iran and Cypher Mining and all of them, TerraWolf as well, they are all they're basically outgrowths and they're subsidiaries of NVIDIA. NVIDIA is now, according to the information, going to be paying them to rent back their GPUs when they install them in the data center. This is something that only happens in an industry without diverse and real demand.
Meta is an interesting case in this instance because they don't as yet have the third-party cloud services revenue propping it up. But people point to their own top line having accelerated in the first quarter of this year from like 23% to 33%, presumably because they're implementing these AI tools or somehow making their platform more productive along those lines. And at the same time, it shows you the fallback option. We're creating all this capacity, even if it's not a business model, the capacity is there. We've gotten the kind of the power and the compute in place. Maybe that helps society down the road.
Well, the thing is with Meta is I don't necessarily agree. AI is not driving Meta's revenue growth. The fact that they have an effective monopoly in social media is. Microsoft, Google, and Meta and Amazon are all doing a funny little, I don't want to call it a scam, but it's a trick where because their other businesses are still growing, but they never disclose their AI revenues, everyone conflates that with AI driving their growth. In reality, their other businesses are growing and AI is losing them money across the board. You'll notice that neither Microsoft or Amazon, who both share their run rate of AI, will share the actual AI revenues. That tells you that these companies are afraid. Public companies love good news. If they had good news, why wouldn't they share it? That's because they've only got bad news here.
So what do you think then is the straw that ultimately breaks the camel's back? You've got trillions potentially at stake in terms of just overall CapEx investing through the years. I mean, it seems like there is a collective desire for this to work. What ultimately provides the challenge or presents the challenge in your mind that kind of reverses all of that?
So I heard a Goldman analyst say recently that the first hyperscaler to pull CapEx will get rewarded by the markets. I think that CapEx pullbacks they're the sign. I also think any financing falling through for OpenAI or Anthropic would be a sign, but I think we're going to start seeing AI companies kind of start falling out of favor and not being able to raise money. But the big thing is debt. When data center debt stops being issued, that will be when it's bedtime for this industry. Because even if they think AI is going to win, we've got 100 gigawatts or so of data center capacity allegedly under construction or in planning. That's trillions of dollars of money that needs to come from somewhere. And we are tapping out the debt markets. We saw that with Google raising that $85 billion equity raise.
Although you'd agree that spreads do not imply that moment is anytime soon.
Spreads have been wrong before. That's the thing. And I think that perhaps the timing isn't going to be immediate, but at some point a hyperscaler is going to pull back CapEx. And when that happens, well, this is an industry of followers. The tech industry doesn't have ideas. They just copy each other. Everyone copied Satya Nadella when he put ChatGPT in Bing. And I think that whoever breaks CapEx first, they'll follow them too.
All right. Ed, thank you very much.
Thank you.
Okay. I am going on epic rant right now. I don't care if you guys want to clip this or not. I want to get this guy
Can you put me on the other side of the screen?
Yeah.
Because I'm pointing.
I want to get this guy on the channel. I want to talk to him. Guy,
he'll talk to you. He'll talk to you, man. He'll talk to anyone as long as you let him.
I am going to reach out to him and I am going to talk to him because I want to try to understand if he actually believes this or if this is all a gimmick just to get his name out there. I don't know who he is. I don't know his background. So I'm going to look into him. I have no idea anything about him, but I can disprove everything he said. Everything. I can dismantle everything he said because there's no merit to what.
Okay, so let's do this exercise. It'll be fun.
Hold on.
Okay.
So first, and I've said this before, if I'm going to be intellectually honest, as I try to be with everything I say, I don't say that the bears have no credibility. What I say is I think that they are incorrect with how they are looking at things. And it's important to have a bear thesis to keep everybody honest. And it's important to highlight things that can go wrong. And yes, Oracle has tapped the debt market a lot more than everybody else. Yes, they are free cash flow negative. This is all known. We do not know what the future holds. It is a leveraged company. To say that the debt markets are getting exhausted because of what Alphabet's raise was oversubscribed. They actually increased it from 80 to 85 billion because of how much demand there was for it. This is not a debt market that is tapped, especially when it comes to the hyperscalers. Now, to say that we cannot see where these companies are making money, that is untrue. And the greatest minds, these companies, once again, would not be doing this. Take OpenAI and Anthropic out of it. Microsoft, Amazon, and Alphabet. We'll put Meta on the side. They are the ones that basically every business in America runs their infrastructure stack on, because the Cisco cloud never really took off. Those are the three dominant clouds. I think between the three of them, you have like 85% of the global market. We can check that stat in a little bit. But when the companies that control more than 2/3 of the global cloud infrastructure market are deploying this type of capital, these are the actual teams that are building the infrastructure stack for all companies to work on. To say that these teams are wrong and a bear analyst is correct is kind of crazy. Now,
no. I'll disagree on that one. I have to push back on it.
Dude,
look, the hyperscalers have made mistakes in the past. Okay, you can't be like, oh, these guys are like they're the smartest people on the planet. They know exactly what they're doing. Look, these are the same idiots that during COVID would literally knife each other in the back, offering bonus to everyone, and then they realized in 2022 they didn't need as many people.
That's something completely different. Something completely different.
No, I'm just saying it's a business decision that they made that backfired on them. So we can't say that these people are building for something that theoretically could not work out in their favor. I mean, look, the fact that Mark Zuckerberg right now had to flip from we're building data centers for our need to we're going to sell compute, I think invalidates that argument that they are the smartest people on the planet and they know exactly what they're going to do.
So them hiring and making those decisions is something completely different than the technological infrastructure. And businesses do make mistakes. I'm not saying that businesses do not make mistakes, but the reality is these three companies do control the majority of the cloud infrastructure out there and AI infrastructure. They're the ones building it, nobody else. They are dictating where this goes because of what the demand is. They have the clearest visibility into it. They would not be spending this CapEx if this was not the future. And this is not just one company. The CEOs, the CFOs, all the software engineers, the collective thought of all of them at different companies. You don't have a single company coming out and saying that these guys are crazy. This is not the future. Not a single one. Every business is looking to adopt this. There is no way that this guy is right in any sense of what he said up and down the line. No analyst has the insight that these companies do. One, in private meetings, which I have sat in, about how AI is going to be used, what it's going to look like in the software stack. These analysts are not in those meetings. These analysts are not inside the companies building this. This is collectively going to be the largest build out because there's demand. If there is no demand for this, this wouldn't be happening. And this guy's just flat out wrong. He's flat out wrong.
I hope
numbers.
Steve, I hope this guy
top $54 billion, which was up 29%, and Azure grew 40%, with demand exceeding available capacity. The AI business alone crossed 37 billion annual run rate, which was up 123% year over year. Right there disproves everything he said.
Let me argue against that, because I think the way that they calculate ARR is actually wrong. What they essentially do is they take the active months, like demand, and they multiply it by 12 and say, look, that's our annual reoccurring revenue rate. Like, it's not as simple as like a software license saying, yeah, guess what, we have this amount, it's guaranteed to cut. We are going through this phase of digestion between everyone doing token maxing in the first quarter and now everyone pulling back a little bit, right? So I would say we have to be very careful on who to believe. Let me just say one thing about this guy's thesis. I think he's over the top with his thesis. I don't think he's necessarily wrong. I do think that the hyperscalers, you're right that they're really smart, but there's one thing I've realized about all of these guys. You know what that is? They're all paranoid. They're all paranoid that they are going to eventually lose their dominant position in whatever respective field they're in, and every single day it's an existential threat for them, and they treat it like that. The reason why Zuckerberg is paying billions of dollars to get AI researchers to Meta is because he's like, look, I missed out on the phone, I don't want to miss out on AI. Like, even if I have to lose money, it's fine. Same thing with Google, same thing with everyone. They're spending money because they think the next guy is going to win, and then they're going to be cut out of the next generational leap in technology.
Well, look, if we look at not Oracle, if we look at Alphabet, they once again show their actual cloud operating margin nearly doubled year over year to 32.9%. I mean, that is a direct contradiction. You look at the backlog. Google's backlog doubled quarter over quarter, not year over year, to 462 billion. These are signed contracts. These are not pie in the sky numbers. These are not maybes. These are signed contractual revenue, and it is not all from OpenAI and Anthropic. They cannot stand this up quick enough. The RPO just from the big four is over $2 trillion. I mean, you look at Copilot. Copilot is the AI stack for Office. M365 Copilot seats are now over 20 million. Seat ads were up 250% year over year. And customers with more than 50,000 seats quadrupled. Accenture alone is past 740,000 seats. 90% of the Fortune 500s now have active agents. And Microsoft's Maya Silicon delivers more than 30% better tokens per dollar. This is what he is saying is wrong, because the shift is already happening. You don't get to a point where 90% of the Fortune 500s now have active agents if this is incorrect. He's just wrong. And I think I don't think he actually believes it. I think this is a gig. I really do. I don't think he believes it.
I think he's partially right and partially wrong. I think he's overestimating the downside, and I think he's underestimating the transformational value that this thing is going to have. And I think the hyperscalers, I think Zuck probably put it right in saying we're going to do the build out because we don't want to be left behind. But if at some point we run into like a lot of compute and we don't necessarily need it, we'll sell it. It's not like there's a shortage of demand. So, I think Zuck played it right. I think all the hyperscalers probably had the same exact thinking process when they did a lot of this build out. I do think that the models are becoming more and more efficient. I do think the adoption curve is a lot more pronounced than previous cycles of adoption, but I also don't necessarily see the transformational value that everyone keeps citing either. Like, I do think that there's incremental improvements that AI
I don't
is
think we'll
providing.
see it for 3 to 5 years.
Yeah,
I agree with you. We're not seeing it now. There's nobody on the bull side can say that we are seeing it now. It is not, we will not know if this actually becomes monetizable to that degree for 3 to 5 years.
Yeah, I think the idea originally, the way that AI kind of posed their value was, you have 100 employees. If I can give you the ability to fire half of them with this AI tool, that means that you just saved 50 salaries. And what's happening is a lot of people that are implementing this stuff, they're realizing that that's not necessarily the case. Like, you still have to babysit this thing, and you have to babysit it. Now you've got literally all this spending that you're doing, and then you're on top of it, you're babysitting this damn thing. So it's like you didn't really lower any real cost. You know, the thing that's actually happening that I've noticed is that if a company was growing and it had 100 employees, they don't necessarily need to hire another 50 to match that growth. What they can do is give the people enough tooling to allow for that growth to only be like 20 people instead of the 50 that the original projected. So let's say you're a business, you're doing extremely well, you're providing a service, it's growing, and it's gotten really good. Before, you would need to hire 50 more people to basically keep growing at the pace that you were growing. AI can help you narrow that gap from having to hire 50 people to now hiring 25. You can basically take the 100 that you have existing and optimize it so that they don't necessarily have to, what is that thing called? Work so hard in the low end tasks. And I think that this tool, AI, is just a workflow optimization tool. Like, I'll give you an example of something that's very simple, but it's also very easy for people to understand, and hopefully people in the chat can, can either agree or disagree. I'd love to hear your take on it. I used to have to wake up, and I used to have to go to like meetings at 2 o'clock because I work overnight, so I have to wake up. I have to, be on a meeting at 2 o'clock. This was like a monthly meeting that I used to have to go to, and it was like an hour, sometimes an hour and a half meeting. It was just like a team meeting where they would discuss different things, and we would be on a Zoom call, and I was getting paid an extra 5 hours, right? Like, okay, here you go, Chris. You were awake, you were on the meeting, here's 5 hours. Now you've got, basically through our WebEx, you've got like an AI summary that, like, once the meeting is over, they just send it to me, right? And I just have it, and I read through it. I don't have to stay up anymore. I don't have to put in for 5 hours of additional time. And I think that's where the actual value is coming, where there are so many processes that AI is kind of eliminating, where you don't have to sit there and read through, watch an entire hour and a half meeting. Basically, the entire meeting and summary and the notes and everything else just get hit. And now you basically save yourself an hour, every month. And it's like 5 hours a month. And, you multiply that over like 50 employees, you just saved yourself a little bit of money here and there, right? So I think instead of thinking this whole thing as, like AI is going to replace workers, I just think it's probably like it ends up helping workers become more efficient. Like, I see you utilizing the same tool in that it probably took you hours and hours on end before, when you're writing for Seeking Alpha, to look for things, look for data, read through things, go through a whole bunch of shit. Now you can use your LLM to do the research, and it doesn't take you nearly as much time. But now what you're doing is your output has gone up 5x, because now you're actually doing 5 times the amount of research that you were doing before, because before you were only one human. Now you've got 5 humans running this for you.
I got bored, and I had Fable, which is incredible, by the way. I cannot tell you how much better Fable is than 4.8 Opus. I'm reconstructing Trueflation, and look at the ingestion map and all the shit I'm putting in here. The Zillow reports, apartment list rent estimates, the Freddie Mac, the mortgage news. I'm putting everything in. I'm going to make my own aggregator.
Good.
Everything. I think I have like 50 different things that are going to be in here.
I like this. This is actually a very useful tool. A competitor to what do you call it?
This is. I'm building it's still building the markdown file. I think I'm going to have this up and running for tomorrow.
That's crazy.
It's going to be fucking great. It's going to be crazy. Like, if you use these tools correctly, what you can achieve is absolutely insane. I think these are a net benefit. But the markets are starting to turn.
Wait, before you go there, look, what architecture are you going to build? Like, how are you going to architect this thing? Are you going to have it all go into like one data lake, and then you're just going to query, your software is just going to query that data lake?
So it'll probably change 5 times in the next 10 hours. I wanted to have a heat map and then like a grid to see everything. I want it to be very visually appealing, and I got to play around with it, and I got to get some different ideas. But usually once I see how it's laid out, then I play around with it. But I want it all coming in as an aggregator. I don't just want it to be like the BLS is 4.2 and this system is 2 or 1.8. Like, I want reasoning behind everything where you can click into it and kind of see everything broken out.
That's pretty
so
good.
It's going to be pretty cool. It's going to be pretty cool.
That's a pretty cool idea. Yeah.
All right. Oil 67.68, ladies and gentlemen. Apple is still over 300. I like it. Where are we falling? Let's see. Alphabet's about even. How do you feel about the Iran situation? You were here when I was breaking it down. These are crazy for the time rewards, don't you think? Instead of performance-based, they're just RSUs.
Yeah, I wasn't a big fan of that. I mean, you know, like, I don't know. It's a very interesting way to compensate the executives, you know. And I did like that they hired some new people, though. That was nice to see that, you know, that had data center experience. The one Twitter post that I saw that I actually really agreed with is that I looked at the board of directors on IREN, and it doesn't look like there's anyone on that board that has any experience with actual data centers, which is not good. So you kind of need to put more people on the board of directors that have actual data center experience on how to build, how to finance, how to, you know, do site selection, do all the stuff that, you know, like that basically it's like carnal knowledge that they could have picked up. So the good thing is the 2 guys that they picked up today, both of them have like a lot of experience within that field. So just, that's always a good sign.
Now, chips are losing a little bit. NVIDIA is down 195. ServiceNow is still up about 105. We like that. Palantir, I know you really like it. I mean, I was reading everything I may not participate in the group text a lot, but I did read everything you said. I love Karp's interview from yesterday. I loved it. I thought it was good. I was a little surprised that he said 15 to 18 billion of free cash flow, to be honest with you.
That number shocked me too, man. I was like, damn, like, what is this guy seeing right now? Like, what am I missing here? I mean, I've spoken to the people at Palantir. Like, I've spoken to a couple of people, right? And they're bullish. They're super bullish, but I'm not surprised that they're super bullish. They were telling me about different things that Palantir is doing, and, you know, like, I'm like, wow, if it works, that's great. Like, but at the same time, I'm still skeptical. Yeah, I wouldn't. I'm probably like neutral on Palantir. I don't think I'm uber bullish, but I'm nor am I like bearish on Palantir at this price. And the thing is, like, they've shown themselves to be innovative enough to be able to compete at this point. So I'm not a buyer, nor am I going to say that this is worth shorting. You know, especially if they live up to that free cash flow number. God help anyone who thinks that this thing is going to like back down to the 20s, 30s, 40s, and even 50s. And my target is like 75. So we'll see what happens. At 75, I'm a net buyer.
Yeah, I recently became bullish again because I think the forward numbers are justifying it. Now, if I had a steel mandate right now, I probably wouldn't be. The amount of people covering Palantir is so crazy. Look at this. So I wrote an article on Palantir June 26th, which was Sunday. I'm looking at July. I'm sorry. It was Friday, not even a week ago. and there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 more articles about Palantir. I wrote this at 109. It's up 19% since then. And one of the reasons was the forward numbers. I thought that when I looked at the forward numbers here, trading at 35 times forward estimates with 110% EPS growth was huge. Carp basically came out and said, you know what, Steve? We are going to obliterate everything that the street thinks that we're going to do. If he does this, this is one of the cheapest companies in the market. I'm really excited to see. Now, here's going to be the tell for me. They report Q2 earnings. For them to get to 15 to 18 billion of free cash flow, they're going to have to really start upgrading a lot their guidance. At the current run rate, you can't do it. So I think their guidance is going to be upgraded a lot. Now, with the market selling off, there's two companies I'm getting ready to pull the trigger on. TKO Group and Qualcomm. I am such a believer in Qualcomm, but Qualcomm to me is a 3 to 5 year play. I think that that's a chip company that runs. I don't know when it's going to run. And I'm actually excited that it's coming down because I missed the original move. I called Amit one night. I wasn't sure if you were up, so I didn't want to call you. Amit and I were on the phone till 1 a.m. It was on a weekend, and I figured you were sleeping because it wasn't during the week. Qualcomm moved so much, and I think that they are in a situation where they are going to change what they are doing to try to take advantage of all the CapEx being spent. And I think that in addition to making that pivot, it's a pivot on a section of their business. We have not gotten 6G. I don't think we're going to get 6G for a couple of years. They are going to be a very big company in it. They're the leader in CDMA technology. And I think Qualcomm is very interesting. Same with TKO Group. My thesis on TKO, have I showed you everything they own, by the way?
TKO? Yeah, they own WWE. They own a bunch of stuff. Yeah.
I think my thesis is really, no matter what, AI, I don't know shit. I could be 100% wrong. I fully admit I could be 100% wrong. Sometimes I get over bullish on it. I'm going by the numbers. The one thing that I'm certain of is we are always going to want to be entertained. And we are always going to look for things to take our minds off things. And when we're home, we're always going to look for something to do, whether it's play video games, watch TV, read a book, talk on the phone. We're always going to be looking to do something unless we're sleeping. I think that Netflix, I think that Amazon, I think that Paramount, they all need more content. And the type of content that never goes away is live sports. And for the longest time, wrestling has been huge. I don't care what anybody says, fake, whatever. It's entertaining to a lot of people. And when you look at the transformation from the 80s to the 90s to the 2000s, this is now something that generations of people can enjoy together. And the track record is it's not going to get less interesting. UFC has dominated MMA. And I do not believe there will be another MMA league nearly as big as UFC. And then Zuffa Boxing, I think, has the ability to reinvigorate boxing. Owning the three of those and putting it on a Netflix or a Paramount or a Prime, I think is the next move. And I think that we're going to really start seeing a big dive into live entertainment and live sports. And I think TKO Group is just one of the crown jewels in that, because you can't it would be so hard. Like, you can create a new TV show, you can create a new movie. That's why there's so many box offices, so many independent films, so many films at Sundance. I don't think you can go recreate a WWE or a UFC. I just don't.
Yeah. Someone's like, Take Two is a screaming buy.
It may be.
Just GTA.
Dude, let me tell you. So for the longest time, I stopped playing GTA 5 because I was annoyed with the screen breaks on my screen. And then I logged into Steam and I realized there was a GTA Ultimate Edition that I could download from the Legacy.
Yeah.
I downloaded it. Chris, the graphics on my computer are so crazy on the Ultimate Edition. It is so wild. I cannot believe how good the graphics are. And I actually started doing a lot of research into this. I don't have a full blueprint. I don't have a full analogy. I think the street is missing how much incremental revenue is going to be generated from GTA 6. I really do.
I mean, it's $46 billion market cap right now. So there's in all likelihood, some of it is probably priced in. You know, I think at 250, at 200, it was probably more of a screaming buy than it is right now. But that doesn't mean that they're not going to launch probably like the largest share buyback program in the history of this company, because I think they're just going to generate a crap ton of cash flow. So I don't know.
Yeah, here's the thing about Take-Two. It's up 5% this year.
Yeah.
It dipped. It ran. Okay. Is it up a lot? Not really. It's underperforming the market over the past 5 years. It's only up 41%. And is it expensive? Well, according to the estimates, air quotes estimates, it trades at 36 times this year's earnings. It trades at 25 times next year and 24 times the following year. They're expecting earnings growth in 2029 because they do not report on a calendar year. This is really 2028. They expect earnings growth to drop off a map. I think this is a Micron situation all over again, where the estimates are going to go crazy for this fiscal year. And I think TTWO, Take-Two, is going to go crazy because I think the revenue estimates, look at this. You're telling me that they're going to think about this. And remember, this is really 2026 and this is really 2027. This is really 2028. So they are dropping this at the end of this year. You're telling me that they're only going to go from 8.59 to 9.18 billion. They're only going to increase their revenue by $600 million after the drop of this game. There's no way that they spent 10 years building GTA 6 to only capture download charges. There's just no way. I don't believe it. I refuse to believe it. Refuse.
Dude, the AI trade is imploding a little bit today.
We're going into a holiday weekend. People are taking money off the table. It's to be expected.
Take a look at this. Look at this. This is today. Micron 3.5, AMD 4, SanDisk, Cisco. Pretty much, this is like the AI corridor right here. And then you've got this AI corridor like Caterpillar and all the suppliers, equipment suppliers. Everything else looks like it's pretty green, which means there's probably a rotation.
Mr. Softy, baby.
Yeah, Mr. Softy is actually making some money today. I wonder.
Microsoft's the easiest play in the market for me. That and Amazon.
Yeah. Yeah, I think Microsoft is probably the best way to play this. Even Meta. I know Meta is down today, but just remember they had a run up almost 10% yesterday, and they just kind of pulled back a little bit since then. Apple is definitely like the safety play because they're not involved in AI other than probably that deal that they have with Google for like $1 billion, and that's it. Everything else is kind of just. Why is TKO down a little bit today?
TKO has been selling off. It got to 215 or 218, and now it's selling back off. It's getting back into a position where I want to start positioning it. I think, and TKO pays a dividend. Did you know that?
You know, I didn't know that. This sector might be the one to look for real long-term value.
What is it?
The financial data exchanges. So basically things like S&P Global. Like no one is not getting off of S&P Global's like bond platform and ratings agencies. Like same thing with like, Moody's, right? CME Group, MSCI, like all of them, like I think they're down because of like quote unquote competitive threat from AI. Some of them are down. Yeah, look at this right now. S&P Global is down 13%. CME Group is down almost 12%. ICE is down almost 20%. ICE, by the way, owns, I think, Polymarket.
Dude, I wanted to. I was looking at ICE one day.
Yeah.
I was looking at ICE one day. It is a very interesting company. I did not realize how much stuff that they actually own.
Yeah, they own a lot of stuff, and like if you look at their business, it's a nice up and to the right, durable business. By the way, man, I'm considering getting an S&P Global subscription. Their market intelligence is insane. And like me being like more of a macro guy, like I really, really need a lot more like in-depth research that's not curated by an LLM. But the damn cost of this thing is expensive, dude.
So expensive.
They don't like publicize a price.
They sell business licenses. That's why it's not really for individual.
Yeah, exactly. So I don't know how I can, but the thing is, like, if you're a student, you can go to like different universities, and they actually have like a version that you can use from it. It's like Bloomberg. Bloomberg does the same thing. Now, I don't know, man. Maybe me, you, Amit, and a couple of like financial influencers, we can get together and pool the funds necessary to get a license, because I think the data that they have is just amazing. And I've been able to get some research reports here and there, like through side channels, but it's nothing as comprehensive as you can actually just open it up and, get the information yourself. And what I like is, in the world of AI, accurate data is going to be worth way more than the slop that's coming out right now.
Have you looked at FactSet?
I have looked at FactSet.
Dude,
FactSet is another one to look at.
I couldn't believe how many APIs FactSet has. And when you talk about what you just said, FactSet is something I've been considering investing in also, because structured data that's correct, and where a business is licensing the data from.
Absolutely.
Yeah, I'm with you on that. I like it.
So let me just show people what I'm talking about. Let me just go to YouTube.
All right. We are bleeding out right now, ladies and gentlemen. We are bleeding out. Apple is still holding it. AMD, Lena's favorite company, just lost 520. Amazon is up, though. We'll take that. Bitcoin over 61,000. I like it. CoreWeave is down. This is getting very interesting. I think I'm going to buy more CoreWeave. I think this is the next one I really go after. And I think I'm just going to have to buy it going down, because I think it can go down further. Hood, congratulations to everybody. 113.84. You're still killing it today. Let's see. Mr. Softy, do not be surprised if it goes past 400. Nike 44. Netflix. Look at that. Netflix After Dark is running wild. We're almost at 77. NVIDIA 195. Palantir 129. Reddit 186. I got to figure out what I'm going to do. In fact, let me do this with Chris live. Let me walk through my predicament, and I'll probably going to wait a little bit, but I'm going to walk through my predicament and we'll game it out. So once again, this is what can go wrong with cover calls. So I bought 100 shares. Why is it not going to the screen? The hell just happened? Hold on. Share. I'm unable to bring this up. Can you see what I brought up or not?
No.
No, it's not going up. Why can I not add to stage? What the hell? Hold on. Wow. Chris, can you bring up an option chart of Reddit? I can't add anything to the stage. Something's going on with StreamYard.
Okay, let's see. Okay, can you see that?
Okay, bring up an option chart for me.
Yeah.
So go to
what do you want to say?
Today 172.50.
Okay.
So this is what happened.
172.50.
I bought 100 shares at 167.70, and I have written, I think, about $34 to $35 of covered calls premium, and I got my share price down to 135 or so. Before the $25 pump yesterday, I had written a cover call for 172.50 for today. It jumped a ton. Now it's selling off. What's the premium right now for it? The premium is 18 or 19.05. I got to figure out what I'm going to do. Am I going to let the shares get called away, or am I going to roll it? I'm already in the money quite a bit, probably a good 20% or so in a month and a half. So I don't hate that. But let this be a lesson. Nobody could have known Reddit was going to run 20-25% yesterday on no news. Okay? Maybe it was a short squeeze covering. Maybe it wasn't. I have no idea. But these are the downsides of what can happen. So now I need to figure out what I'm going to do. And I would have to go to probably September to really roll this and have it make sense. The question is, do I want to hold this and roll this to like 195 or 200s for September? I don't know that I want to be locked up for 2 months. Chris, what do you think?
I don't know, man. The thing is with Reddit, I thought that they were there was like speculative news that they were supposed to get like a deal for a partnership with, I think, OpenAI, where they would do licensing. I thought that's why they were up.
Yeah, there was no official news on that. That was a rumor, and it could be very true. And that was one of my bold theses on Reddit.
Okay.
I may just let it get called away. I don't have a problem with that.
Yeesh, what is going on with this market, dude?
We're going into a holiday weekend.
You think that's the only reason?
Yeah. We're going into nothing structurally changed. We're going into a holiday weekend, and you have a lot of option contracts closing out today.
Yeah.
So people may be selling into some weakness, or a lot of people covering. Who knows? But you know what happens in 2 weeks? We get earnings. We got the banks, and then we got tech. So I'm not worried long term. I think, you know what, day to day, I don't play these day to day. Well, I'm looking for.
I don't know, man. If one of these hyperscalers comes out and says our CapEx is, well, I mean, technically they wouldn't say it midway through.
Dude.
They'll probably say it like, if anything, they'll say it like what?
The upgrades are coming. Palantir just got an upgrade by D.A. Davidson from 165 to 175, from a neutral to a buy.
Yeah.
The upgrades are coming. Carp strikes again. Alex Karp strikes again, ladies and gentlemen.
Do you think that's the reason why Anthropic's repeatable choice to take confrontational tact with the U.S. government has resulted in government placing restrictions on AI models and Anthropic pulling its own models from the market? If an enterprise customer built its business directly on top of these models, the disruption to their business could have been catastrophic. Ooh, that is true. In contrast, a company that built a business on orchestration tools such as Palantir would only experience minor transition as Palantir swaps the AI models underneath its solutions.
That's
wow.
Strikes again, because that's exactly what he said in the interview, more or less.
Wow. That's actually interesting. That's a good angle that that you want to play with this. You know, saying, look, yeah, I like that. That's smart.
Yeah. Look at that. Look at that. Well, the NASDAQ flipped red. It's down 167, which is not bad. I mean, look, we're at 74.81 on the S&P 500. I think this is a good number where we can go into July 4th weekend, the 250th birthday of this great country, feeling good about the market, heading into Q2 earnings. I'm super excited about that. Let's bring up what Chris is looking at. Let's see where everybody is, and then we're going to go to lunch.
Tanner, Is that back to the negative, Jason? Look, my entire goal now is just not to be last. Jason is last. Thank you, Jason. You are my Mississippi.
So keep in mind,
Yeah.
I have to update Jason's because he has the spin out. I'm going to do it this weekend.
Yeah. Of
Honeywell spin out. I promise I will get it done this weekend, Jason.
Yeah. So then we have the rest of this. Now, this is what I was talking about with S&P Global. You know what? People can look it up. Remember I was originally saying like how people were getting quote unquote like not tricked, but deceived by Fable. Like this is what it was. This is someone who posted about. Check it out.
Well, it's going to revert back to Opus for coding.
Yeah, no. But the thing is, like, I just paid $321 for coding session where Fable 5 refused to do the work. 75% of the session got routed to Opus because the new classifiers kept flagging routine coding work as cybersecurity risk. So basically, they went from this to that. So it's like you're not really getting Fable 5 because you're quote unquote coding risk.
You're not getting it for coding right now, but you're getting it for the research and everything else, and there's a way around it. The way around it is you use the Fable 5 on the chatbot to flush out the idea and build the build file, the markdown file for you to give to Claude Code. And then Claude Code doesn't have to think about it. It'll just build it. It doesn't matter if it's Opus or Fable because Fable already built the entire markdown file. So that's not a perfect workaround, but it is a workaround.
Okay. Interesting. All right. I wonder what kind of job this guy asked for $320 worth of compute. Like this guy must have been asking some really complicated questions here. Like the build must have been like, dude, what does your bill look like?
You should see. You should see what it's doing right now.
What do you mean?
It's been doing this for quite some time. So I gave it a bunch of websites to look at. And I said, can you research the sports car and TCG market? And I gave it a whole ton of websites. And then I said, oh, it just finished. And any other sites you need to, I want you to research everything you need and figure out businesses that we can build online to make money, figure out what is needed in the marketplace, and come back to me with actionable ideas. So it just built everything out. I have not, you guys just saw it pop on the screen. And this is what it came out with. So I'm going to read this, a whole 14-page thing. I'm telling you, Fable is crazy. I cannot wait to read this while I eat lunch.
Enjoy.
Crazy. AB, thank you so much. I'm going to be adding to CoreWeave. I don't know when. It's either going to be today or Monday. We'll see. All right, ladies and gentlemen, thank you so much for joining. I will be back at 3:45 to close out the market. Thank you, Chris, for your service in the great military. And if I don't see everybody, have a great 4th of July weekend. I will not bring up what Chris is looking at. And
it's not me. It's my Twitter feed. It's my feed.
I'm just saying, I'm not going to bring up what's on your feed. And
it's my feed. It's not me. You can show people. I don't care. Like I didn't search for anything.
I'm just saying.
No,
okay.
Go ahead. Go ahead. Now people are gonna think I was watching a porn or something. Just share it.
No. Nothing like that. I'm just not I don't like bringing up people's Twitter feeds. That's all. Anyway,
no, it's fine. Go ahead. I'm giving you permission. Just bring it up. This is what came up. It's
nothing. It's nothing like that.
It's not big booty Latinas. It's basically a girl in a bikini kicking a like top off of like a beer bottle.
Yeah, he legitimately clicked on his feed. I'm just not bringing it up. Yeah, it's a karate thing. That's all it is. So,
yeah.
Anyway, thank you everybody for joining. Please go follow Chris on X. He puts out a lot of great content. And you know what? A lot of the stuff that Chris puts out, I think, gets a bad rap. And I think it's very important to take everything seriously because there's a lot of aspects that we need to consider because you know what? The markets don't go up in a straight line. And these businesses do have structural risks. So there we go. All right, everyone. I will see everybody later. 3:45. If you could do me a favor, like and subscribe, I'd really appreciate it. Have a great afternoon. Go have a good lunch. See everyone later.
Later, guys. Have a good one. Take care.